In this video, we're going to talk about how we can use price action rules to help us predict direction bias of the market and where are the high probability setups. Today's session started with very spike down. We have a break pushed to a new extreme. We have a spike back above the EMA, the supportive indicator 1 bar exponential moving average. And now we have spike and a channel pattern. You can see the first part of the move is bullish spike. And then we have flatter secondary lag, which is the channel. This is a common pattern in price action. You can see market geometry fits well. The channel fits well. So the bias right now is bullish, and we're thinking only about long opportunities. We're not thinking about selling because the channel is in play and it fits well. There's always a channel being present on the chart. Market is correcting. I'm going to use latest highs high to start counting. However, there is no break above neither one of these bars high, so there is no first entry long here or here. So market is correcting. Now we have a first entry long because of the first bar we actually broke above its high. But first entry long is not high probability setup. We want to see the tool get pullback, second entry long. So I'm thinking about some mini pullback, testing the EMA one more time, get a second entry long because we expect new high to be tested following the trendline rule. This is how we can identify what's going to happen, the direction bias, because trendline rule says after break you expect new high to be tested and only then potential reversal. We have a second entry long here, but the problem is it's simply so far from the EMA. There's a gap. We want to see setup forming close to the EMA. So I can't take it. You have a break push to a new extreme. I was thinking there can be some wider pattern because the break is so minimal, but because we quickly reverse all the way down, I'm gonna stick with the break, push to new high, market cycle into reversal. So great price action. I'm gonna follow the downtrend, break, new extreme already. Okay, you break a new low. I believe you have some news here. Yes, you can see the massive spike up. Of course, we don't want to trade exactly around the news, so just be patient. Now we have no bias because all trends played out. We're starting to go sideways. We have price action caused by the news, so we can't take anything. The downtrend's in play. You have a high low here, but it's not good because it's not confirming anything. There's no pattern, no nothing. This is just bad setup alone. The downtrend's in play. Just be patient. You want to take a setup where everything aligns, just like here. You expect second entry long. You have a massive push down. I have a couple of ways how I can draw this downtrend. I can either start here and I can draw downtrend like this and I have a small break push to a new extreme. Or I can start drawing it as the market is developing, something like this. But there's overshoot. We can draw it wider too, but it doesn't fit that well. You can see there are no confirmations here. It fits like the bottom just dropped lower. It's a little bit too steep. A lot of bars, big bars at the bottom of the move. So let's treat it as overshoot, or there's a break push to a new extreme. We have a second entry short, but we have to skip the very first second entry short after overshoot. So we're thinking about lower high confirmation setup. Great lower high if there's going to be break below this bar. Lower high confirmation setup because the EMA keeps holding, but there was no break. And this is a good lesson. You cannot enter quickly. Okay, you have to be a disciplined trader. Wait for trigger below this bar. Otherwise, the entry didn't happen. There is no trigger. There is no lower high. So market keeps working higher. Now I was still thinking we can get a lower high below EMA to test the new low, but you can already see something is happening. We're working higher. It's a little bit too bullish. The lower high really needs to form great. Preferably I felt second entry long. Lower high is terrible. Bullish bar, so I can't take it. And we're back above the EMA. So this is a sign, okay, overshoot is truly generating stronger correction in the opposite direction because we have a two-legged pullback now here. And we exceeded the two-legged pullback. So this is a sign that we're probably not going to test the new low. Okay. You can see how we have series of high highs and high lows. So we can draw bigger downtrend like this because we have some market geometry to support it. You have a new high, first entry long, pullback, second entry long, further confirming the channel and it's above EMA. But this is a little bit more advanced because the structure is quite unclear. Okay. There is a chance that this downtrend may get new extreme, although after this push down, this is really where you expect prices to test the new low. The fact that you have massive push above EMA, it's simply telling you, okay, this is way too bullish. The market geometry is too apparent. You can see higher highs and higher lows. Every single low is higher. There is some series of these price swings, so more advanced trader can consider, but the structure is not fully that clear and not easy to understand. But you can see how there is some reaction here. And once you have felt second entry long above EMA, this is a good time to go long here. Okay, This is such a tiny insignificant overshoot. We can draw a little bit wider, but we can't still go long. This is just a first entry long. The downtrend is in play. The key level held, so this is nicely confirmed uptrend. So once again, this is how we follow price action. We're just looking for these channels, identifying the structure. We're using market geometry. We can see the consistency in this price movement. Okay, once you learn this skill, you can understand what's going to happen. So you definitely can see the consistency to this trend, higher highs and higher lows. There is a channel, it fits well. So we're only thinking about buying again, second entry long at the EMA or the trend line. Typical standard stuff. I have to reset the count at each new high. I can draw mini downtrend here. I kind of don't like it because this leg seems a little bit longer, so I can draw it brand new leg like this. I still have a break, close outside, push to new high, and we have another second entry long. We have a new high, first entry long, pull back, second entry long, off the key entry point. You can see 1, 2, 3, 4, fifth bounce, second entry long at the key entry point with the direction of the trend is exactly according to price action rules. Can I get a high low confirmation side of EMA? It actually first trigger lower and then reverse up. So you can consider going long here, but I like waiting for this one because it first trigger lower, reverse up. So I want to see how this bar is going to close. Either way, no matter where you enter, this is a decent high low. It's not the best signal bar. The first one or the second bar kind of doji-ish, but it's not that big of a deal because you have key entry points. You need to get new high. I mean, signal bar is weak, but not that terrible. You got nice tail off the bottom, decent body. You know, it's confirming the second entry long. I like going long here. It stopped me out quickly just to see it eventually go higher, but I still believe it is a decent side to take a chance because second entry long, key entry point held, push above EMA, you have to take a risk. Second entry long of the key entry point. Now you have a mini second entry long again, a new high, excuse me, new low, first entry, short pullback, second entry, short failure. And this is a little fake out trap, the high low we took right here. This is a strong bullish signal bar, double high probability setup. You know, this is a decent re-enter opportunity for second entry short as well. So you can consider going long because everything is still the same. We still need to get new high. And now you even have high low confirmation. So high low here, the market. And now we have high low confirming the second entry long and the fact that uptrend needs to get new extreme. So now we have a break in new high. So I'm going to pause looking to go long. I'm going to redraw the downtrend working. I was expecting now a stronger reversal because now I can pay attention to this key level. It looks like a trend range overall. So I'm really thinking about second entry short the EMA, but market quickly reverse all the way back up. In fact, if we're going to take a look at 10,000 tick chart, this is why I like working with the 10,000 tick chart. You can actually use any higher time frame. It's helpful to look at it here and there because these breaks sometimes are so tiny that if you're going to take a look at the higher time frame, you can see that the channel is actually a little bit wider. And because I can see no downtrend continuation, I can see bullish push up. At this point, I'm going to adapt to slightly wider alternative. It aligns with the higher time frames. You can see still keeping the structure intact, which is a good sign for me to widen because there's no empty room. I still keep the initial confirmations. That's a good sign I can widen. However, it wasn't really helpful because there was no high low, no false second entry short market, instantly created breaking new high anyway. So there is no setup pretty much for us to take. Market keeps going higher. And this is a massive push to new high. Hold on, this is not what is supposed to happen. You're supposed to get a break in new high and you're supposed to have bullish depletion. That's the trend line rule. Look at the massive leg working higher. This is significant leg working higher. This really doesn't happen if the bullish bias is over. Okay, you can have a couple more pushes higher, a couple more pushes, but this is substantial bullish leg. So this is telling you, okay, I cannot be thinking about reversal now. We're simply trending too far up. It's too bullish. If there's going to be felt second entry long below EMA, I can't take it because it's simply now way too bullish. But at the same time, all patterns seem a little bit too broad now. Nothing really established. So this is once again area where I have to be a little bit more patient. Okay, market keeps going higher. Once again, keeps going higher. So confirming the bullish bias. Gonna redraw the downtrend. I felt second entry long here. I can't take it because it was simply way too bullish. Okay, I still prefer to get a little bit more information. Now your gut feeling is telling you definitely, okay, it's way too bullish. There probably has to be some bigger pattern. This is definitely not going to look like a reversal, but sometimes it takes time for price action to unfold its cards. So let's patiently wait what's gonna happen. Downtrend is in play right now. Okay, we're going sideways, and now the EMA is super flat. So now I can draw this consolidation because you can see consistent pricing up and down. This is a congestion, EMA exactly on these bars. Pretty much no trade zone, break a new high. I don't think we can sell given the fact how bullish this was, even though it worked. Second entry short. You know, you always want to focus on buying with the direction you trade up into this. Okay, so it's always better. And by the way, yes, you traded down, but this is very short term. This is local push down. The bigger bias is you can clearly see you traded massively into this. So it's always better to be taking the risk buying at the bottom rather than selling, because chances are high you're gonna catch a major move going higher. Instead, when you're selling here, you're just basically betting that you're gonna get some tiny scalp. And lo and behold, we have one leg down, break, second leg down, one leg down, second leg down. This is a new high, first entry long, pullback, second entry long. We can also view it as a mini failed breakout. It's not the perfect failed breakout because it didn't fully break below, or you can basically view it as sort of like a triple test, one bounce, second bounce, third bounce. Either way you look at it, this is clear broad to get pullback. Even this downtrend now played out with this break, which to new low. So all trends played out. There clearly cannot be no bearish pressure. This trend is invalid. This is absurd. These trends are not legitimate. This is too broad given the consolidation. So everything is telling you that there is no bearish bias present. And this is a great sign for you to go long on a second entry long failed breakout, or you can view it as a mini triple test. So it's a great hyperactive setup. Great signal bar too. Decent risk. It's not that big. High-low confirmation setup. High-low confirmation setup above EMA would be great. High-low confirmation setup. This bar is a little bit too weak. Secondary bar is an inside bar, so kind of take it. If you have some better high-low on your chart, definitely great setup, but on my chart, it's simply triggered only above inside bar. You know, didn't trigger that well, but it's a great setup context-wise, but on my chart, I can't take it. Another massive spike back above the EMA. Okay, so once we have a brand new high that exceeded, once again, all of these previous highs, I simply have to now look for a bigger pattern because it's too bullish, okay? It's too bullish. Even after this consolidation, we broke higher. So now I'm going to draw a bigger pattern. Once again, the 10,000 tick chart was very helpful for me to look for this channel because it fits much better there. You can see there's so much price action, so many bars inside of this channel that we can start trusting this. Okay, this is interesting pattern. We have one leg down, break, second leg down. And this is what we call a breakout pullback. We broke higher, we came back, tested this breakout area. So this right here is now second entry long, pullback, breakout pullback pattern. And you can see how you're working with this structure right here. While the price action in this consolidation, you're using the consolidation to fade the breakout with the direction of main trend. And once we break higher, you're waiting for the breakout pullback. Once again, using the previous structure of the consolidation part of the bigger pattern as a breakout pullback. However, it is below EMA. Now, if you're a more aggressive trader, you can consider because you're betting on the breakout pullback level. If it's gonna form above the EMA, then you can definitely take it. But because it is below EMA, it is a bit more aggressive. Can get high low, no high low. Market is correcting. I'm gonna redraw the downtrend. You have a second entry long here, but it's a horrible inside bar. I can't take it. And also, this push down is looking quite structured. It looks like the downtrend is a little bit wider like this. You can see it still fits perfectly. We have quite a congestion here. Downtrends in play, EMA on these bars. Nothing here. Breaking extreme. Downtrend played out again, followed by a significant pushback above EMA. So this is interesting because now, since we are in a big pattern, big uptrend, downtrend played out, and you're back above EMA, there is only one option, and that is a brand new push phase is about to start. You have a new low, kind of like a mini pullback, mini high low, push above EMA, and now we have a failed second entry short. So downtrend played out, new low, first entry short, second entry short failure. So this right here is a failed second entry short. All trends played out. We are part, as you can see, the big trend, and this is a great hyperactive setup with the direction of the main trend. It's above EMA. Decent signal bar. Would have been better had it closed higher, but still the body is significant. So decent setup. Market keeps working hard. Quick easy scalp. I have to redraw the downtrend like this. Okay, we're correcting. You can see the downtrend played out. Now it's still getting way too late. Market is about to close. There was new low, first entry short, second entry short, but we can't simply take it. It's too late. You can see it's a cutoff point. You want to stop trading, let's say 30 minutes before the close, so you can see the key entry point held again, downtrend, new low, first entry short, second entry short failure, so we can mark it just, you know, education wise, but you can't really take it because it's way too late and you don't want to be taking a setup this late. Breaking new high and the market is about to close. So this is the overall structure for today. We started with consolidation and later on evolved into a nice bullish trend. This is pretty much the area where you have to start looking for some wider channel, because why this push to new high is so substantial, it doesn't act as a breaking new high. So this is your first sign there's probably a bigger pattern, and once you create another new high, then you have to start looking for bigger pattern because we just keep working higher. So decent price action. I hope you had a good trading day. I'm gonna wrap it up. I'm gonna talk to you next time. Good luck with your trading.